So what's happening with this crazy housing market? Is it time to buy? Is it a terrible time to sell? Well, in this video, we're going to cover off a New York Times article that talks about the US housing market, and it closely mirrors what's happening in Toronto and the GTA. And make sure you stay until the end, because if you think buying and selling real estate market is tough, well, there's another market that's even tougher. So let's get to it. Hi everybody, my name is Connie Sarvanandan and I'm a real estate agent and investor here in Toronto and the GTA. And if you've been with my channel a while, you know that I have two teenagers. And teenagers are moody. So what is more unpredictable than a moody teenager? It's the housing market. So in this video, we're gonna look at a New York Times article that is actually titled, "What's Up with This Crazy Housing Market?" And I think it's gonna address a lot of the questions that you have, whether it be, should you buy, should you sell, what's happening with the rental market. I like doing articles because I feel like they present an unbiased opinion versus me just telling you exactly what I think. But I do add what I think into it, but that's why I use articles so much. So let's get to the New York Times article. And by the way, I chose this article because I do believe it reflects very much what's happening in the Toronto and GTA market, although the article is talking specifically about the US. Okay, so this is the article. I will try and link it below. I've been having some issues lately because of copyright, so if it doesn't link below, I just want you to know you can find it on newyorktimes.com, and the title is "What's Up with the Crazy Housing Market? Rising Mortgage Rates, Faltering Home Sales, Skyrocketing Rents. Here's how to make sense of a baffling real estate market." Now, again, this is talking specifically about the US market, but most everything they're talking about also applies to Canada. And I think it's a really good article that kind of explains everything. Now, it's fairly long, so I'm going to summarize it. But again, if you want to get more details on it, go right ahead and find this article, as I just said. Okay, so the first paragraph. The first paragraph is basically saying, after a 2-year boom, where the market was crazy, the market is definitely pivoting. And what is it pivoting to? Because people are very confused, and that's what this article is trying to explain to people. So what it's saying is that the spring is typically when you have the most active market in a normal real estate market. But this spring was really a dud, and all these rising interest rates have really put a damper on it. And most experts were not expecting this kind of damper. So what we have been used to, which is bidding wars and, craziness, that seems to have gone away. And what's actually happening right now is that buyers are on the sideline just watching the market, and they're also recalculating what they can afford based on these new interest rates. So that's the first paragraph. So the first paragraph was about the resale market, and the second paragraph is about the rental market. And what they're calling the rental market right now is the Hunger Games. And I have to say, based on what's happening in Toronto and the GTA, I agree. All the frenzy and craziness that we saw in the resale market for the past 2 years has now moved over to the rental market. And I'm going to share a story. I have a friend who has a place that she's rented out for a long time. And typically when she rents out her place, she'll get 5 applicants. Well, when she rented out her place this past week, she got over 30 applicants in the first 48 hours. I mean, it's absolutely insane. And the incentives that people were offering in order to get the place were also absolutely unheard of. So definitely the frenzy that we saw in resale has now moved over to rental. So why is all of this happening? Well, the New York Times has asked analysts, economists, and real estate brokers to explain it. And so that's what this article is about, and that's why it's a bit longer and it goes into more details. So let's see what they say. So the first question they asked is what's going on with interest rates? And, unless you're buying a home with cash, interest rates really make a difference. And the example that they gave here is, first of all, both Canada and the US has raised its interest rates significantly. And I'm going to show you the Canadian version in a second. But what they did here is give an example that in January, if a buyer had a $500,000 mortgage, they would have paid about $2,100 a month in principal and interest for that $500,000 loan. Today, that same loan would cost $2,900 a month, so an $800 increase. And then they give the examples of the 30-year fixed rate in the US. And so what the experts are saying is, first of all, that the buyers can't handle this double sided punch, which is, first of all, home prices increased significantly over the last 2 years, and then second of all, interest rates have gone up significantly. So that double whammy really makes buyers pause, relook at their finances, and really look to see what is going on in the marketplace before they make a decision. The other thing that they're saying is they aren't expecting the same interest rates that happened in the 70s and 80s, because those interest rates went all the way up to 18%, but they're not sure when this is going to stop. And basically what they're saying in this article is that interest rates are tied into inflation. So inflation continues to go up, so will interest rates, and until inflation is under control, they're going to continue to raise interest rates. And it's not just buyers that were caught off guard. Nobody expected this kind of increase in interest rates, and it's really putting a wrench into a lot of market predictions because, when the vaccine started rolling out, people thought the economy would just recover and there wouldn't be any issues, and now all these other things are coming up. And then when you look at Canada specifically, this is the Bank of Canada. And so this is the Bank of Canada overnight rate. The overnight rate is what sets what the banks use to set the mortgage rates, or financial institutions use to set the mortgage rates. And what you'll see is, we were at 0.25% forever, basically over the last 2 years during the pandemic. Then they doubled it to 0.5. Then they doubled it again to 1%. Then they did a 50 basis point increase at 1.5%. And, this week they're expecting another big jump. So Canada is following the same trajectory as the US. And so what does that mean for mortgage rates? Well, this is an example of a 5-year fixed mortgage rate, and what the forecast is from what it was and what the forecast is. And what you're seeing is, year over year, this is Q3 2021, we're at like 2.5%, and they're expecting Q3 2022 to be 4.5. So, you're doubling what we have been used to for the last few years. And that's what they're saying. Buyers are now looking at everything and saying, okay, I have to look at affordability, and I have to look at these price increases, and I just need to hold off and figure all of that out to make sure I can still afford to do it and make sure it still makes sense to do it. So those are the two things that they're looking at. If you're finding value in this content, please like and subscribe. It really helps us out, and it lets me know what kind of content you're looking for. And if you have any real estate needs, feel free to call, text, email, or WhatsApp, and we'll be sure to take care of you. And also, if you want to talk to me directly, I'm going to put my calendar link below. So the next thing is the big question on everybody's mind: to buy or not to buy. So what the New York Times is saying, it's still a seller's market. Now, this is from May. That's not necessarily true in Toronto and the GTA. We are definitely more imbalanced territory, and we could definitely be going towards a buyer's market, but as we get more inventory into the marketplace. Now, the things that they are saying is that for them, what they're saying, if buyers want to wait, then that's okay, because they don't think that, anything crazy is going to happen over the summer, and there could be opportunity. But if you need to buy a home right now, then it's not necessarily a bad time to buy a home, just because of this uncertainty. You may be able to get into something where you really like it. And even with the high interest rates, they're just reminding everybody that the interest rate isn't necessarily forever. So we have a saying in real estate, which is you marry the home and you date the rate. So the rate is never forever, and the rate changes and it goes up and down, but the house is forever. So, buy something you love, and, you deal with the interest rate as it comes. The other thing that they are saying is that, there is opportunity in the marketplace right now, and I definitely agree, and I always say this, is that these are the markets where you're going to find some great bargains, some great opportunities. So keep an eye out for that. Even if you're on the sidelines, always look at the opportunities and always stay active in real estate. So even if you've decided don't buy right now, you should be seeing homes, visiting homes, looking at homes, so that you know exactly what the value is, so that when you are ready to buy, you're understanding the marketplace clearly. And then the last thing they're saying is, as the market cools and we start to get to a more normal marketplace, this is good for everybody. And that means that for buyers, you're going to have some opportunity. So what is that opportunity? It means that as homes take longer to sell, you may be able to do things like ask for appraisals and inspections and things, financing conditions and things like that. So there is opportunity for buyers as the market starts to cool to do those things that we haven't been able to do for the last 2 years. Okay, so next is if you're thinking of selling. Basically, the first thing they're saying is sellers need to reset their expectation. This is not the market of the last 2 years. So you're not going to get an all cash offer, 100,000 over asking within the first 24 hours of being listed. Those days are no longer here. What you are going to get is, if you are priced right, then you are going to sell it. It may not be immediately, but you will sell it. And you are going to get more than what you would have gotten a year ago, and certainly what you would have gotten pre-pandemic. So that's kind of the expectations, and that sellers should know that. Whether you should wait or not to sell, their recommendation is that basically, if you have to sell now. At least you know what the market is and you understand it. And if you can wait, then wait. It could go up, it can go down. But if you're not rushed to do it, then you have some flexibility. You may also end up winning if you are rebuying and there's changes in the interest rate. And then the only other thing that they say in all of this is that if you are selling to go into the rental market, then you should be cautious. And I'm going to talk about that next point because of the crazy rental market. And I think personally, this market, the winners in this kind of market are people who are either moving up in pricing or downsizing. Because if the market has dropped, then the market has dropped across the board. So you may take less on the sell side, but you're also paying less on the buy side. So if you have $1 million property that you're selling right now and it's 10% less than what you thought it was going to be, well, now that property is going to sell for $900,000. But if you were, so it's $100,000 difference. That's that 10% drop on $1 million. Now, if you're buying a $2 million property, that's going to drop 10% as well, which is $200,000. So you're going to pay $1.8 million for that $2 million property if they both lose 10%. So you win there. And then if you're selling $1 million property and you're buying a $700,000 condo, and it went down by 10%, that's $70,000. So your condo is now worth, that you're buying is $630,000. So I do think that this type of market, the winners are really those people that are either moving up or moving down because the delta is both on the sell and on the buy. So you're gonna maybe take less on the sell, but you're also gonna pay less on the buy. And then the final thing is that this article specifically talks about is rentals. So the last thing is rents, and like I said at the beginning of this video, rental units have now become what resale was before. And when I was talking about the craziness for resale, I meant resale and new construction as well. There was just craziness in all those markets before, and now that's all shifted over to rentals. So with rentals, what they're saying here is, there were markets like New York at the beginning of the pandemic where there was this mass exodus out of New York and rents dropped, and there was huge incentives like 3 months rent and all of that. Not only is all of that gone now, the rent rates are now higher than 2019. So rentals are full on crazy, and what they're noticing too is that a lot of people are renewing their rents because they don't want to risk leaving a place where they have already established and been approved for the chance of getting something else. So really they don't predict that this is going to change anytime soon, because there is a lack of inventory when it comes to rentals, and because the housing market is so expensive right now, you're not getting the renters moving from rentals to buying, especially with the prices the way that they are and the interest rates the way that they are. So that's all contributing to it too. So rental market is definitely crazy, and I would say that's true in Toronto and the GTA as well. I did do a video about rentals and how you can make a really clean application for a rental. I am a landlord, and I vet a lot of applications, and if you have all your paperwork lined up, you just make it easier for your application to go through, so that there's no back and forth. So that's it. If you have any questions about this article or how it specifically applies to Canada, feel free to reach out. And if you have any real estate needs, feel free to reach out as well. Call, text, email, or WhatsApp, and we'll be sure to take care of you. And if you want to talk to me directly, I'm going to put my calendar link down below. Thanks for watching, and I'll talk to you soon.